Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. It is February 22nd, 2022. It was everybody's calling it, I guess, the day of the twos, right? The 222 Tuesdays. But my kid said, wait a second, it's not 222 yet. That'll be 200 years from now. Then it'll be February 22nd, 2022. Or 2222. So we're close. We're close. As close as we can possibly get in our lifetime. But anyway, interesting day out there today. A lot going on. Markets are kind of interesting, reacting kind of as predicted. A lot of news will be happening in the next hour, or I guess not in the next hour, but an hour from now, I guess is the better way to say it. The president is expected to speak at 1 o'clock Eastern Standard Time. To kind of discuss the Ukrainian situation. We've heard from European allies what kind of the first step is, and then since that time, since the initial sanctions have already been put in by the UK as well as Germany, there's even been more updates about the Russian parliament has now approved military efforts outside of their borders, which is one update, and then also that I guess Putin has now signed agreements, protection agreements with the rebel forces inside of the Ukraine. And actually, since that time, is also, in addition to that, is also claimed more territory than they currently have right now. So he's just going to keep taking, I think he's going for the whole thing. And then, it's just ever evolving with headlines today. So we'll check the markets out and see what's going on. And then again, kind of plan out the rest of the week as best as we possibly can. Again, geopolitical events and even something like this, which you would assume is common sense. Yeah, there's no way to kind of put, this is what should happen or this is what's probably going to happen. I think the only people that know what's going to happen are the people that are there. So with that said, let's go into kind of, again, for new people here, let me give you a quick kind of 30-second rundown of who I am, for those of you that don't know. I'm the president and CEO of a company called Keep Trading Simple. I've been trading since approximately the Y2K 1999 time frame. I started with stocks and traditional options like most people do. I ended up finding currencies and I fell in love with that market because of really the 24-hour nature and the idea of leverage. Learned to trade futures after that, and then I ended up spending some time traveling around teaching people to trade. I did go on the inside, so I can say that yes, I did work on Wall Street, not actually on the exchange. I actually lived 2 blocks from the New York Stock Exchange. I used to walk past it, but from my office window, I could actually look and see the bull. So I used to eat at all the same restaurants, Happy Hour, Stone Street, with all the the floor traders out there, and actually trained a couple different floor traders as well that came in looking for some help. After that, I ended up traveling a bunch more from all throughout the United States and Canada. I met my wife up there, actually in Vancouver. Realized that my true passion after being on the inside was really teaching people how to do it themselves. The industry is really not what people would think it is. But I did learn a lot about bonds when I was working for one of the big 3 banks. And I again, very, very thankful with that time. But these days, my focus is really kind of helping other people do it themselves, understanding kind of what you really need, what you don't really need. And again, that's why I named the company Keep Trading Simple. So you'll notice my charts today are a little bit different. I don't have indicators all over the place. It's not that I don't know how to use indicators. It's just they are all typically lagging. And I feel that they really do nothing more than just complicate things. My belief is if you understand and you know how to read price action and how candles are formed and you understand really kind of what's happening on multiple time frames, there's really no need for something that gives you a red or a green and tells you to buy or sell. So, you'll see on my charts, I'll throw indicators up there. I'll use fibs because it's nice knowing what kind of the general public is doing out there. And again, a lot of these trading algorithms and things and how they go. Okay. So what we're going to do today is we're going to cover a bunch of different things. Before we start and looking at any charts, though, we do have to cover this Nadex risk disclaimer. This is basically sponsored by Nadex. The trading on Nadex involves risk and may not be appropriate for all. That members risk losing the cost end of the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented here is being construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. Rather soon, that probably be switching over to crypto.com, but when that does, we will definitely make sure we update everybody and give you guys any updates we possibly can. So Today, what we're going to cover is upcoming news events. Obviously, the Ukrainian situation is one of the biggest things kind of out there. It's the major headline right now. There is some other economic data we can talk about, and a lot of it is basically revolving around what's happening with the Fed and rising interest rates. We do have an interest rate hike today from another country, not the United States. And the big question is, is this current situation going on in Ukraine, is it going to affect the raising interest rate schedule of the United States? We know that inflation is at a 40-year high. It's broadening. It's not getting any better. In fact, there was a news report this morning that gas prices in California went up to $6.21 a gallon. 6.21. And to think that just 2 years ago we canceled a pipeline that would have kept our oil flowing and easy and having easier access to it. Hindsight, I guess, is 2020, but yeah, $6.21. Crazy, crazy, crazy. And that's going to start actually hurting the economy as well because of transportation costs. So after that, we'll dive into indices. Again, indices are kind of a strange play, and I am definitely hesitant to say, hey, listen, this is a great buyer, this is a great sell. Literally right as we're wrapping up, the president is about to speak and can talk about really what's going to happen next in this, who knows, potential World War III type scenario. So is it the ideal situation? No, but we'll do the best we can with it, and we'll look for some technical levels and see what we can grab. Then we'll cover Forex, and again, Forex is obviously very pertinent right now. When we're talking about raising interest rates and we're talking about sanctions, one of the sanctions right now is against 5 Russian banks and some wealthy individuals. So again, the central banks are sanctions and things like that. They're starting to get involved, but we'll talk about kind of economic news events that we could particularly trade this week that will kind of move outside of everything that's happening with Ukraine. And then commodities. Commodities also a hot topic right now. Russia is actually a very large energy supplier, particularly to Europe. We know right now, as far as commodities go, natural gas at last I checked was up like 4%. A little crazy right now. Reason why is because, again, the United States and Russia are the 2 biggest kind of natural gas suppliers in the world. And a lot of natural gas that is supplied to Europe is coming from Russia. And the Nord Stream pipeline, that's a way to get natural gas into Germany, and it has now been halted, the certification of it. So it's not being used. And the threat that we made was that if troops crossed, that we would shut it down permanently. So troops have crossed. Now it's time to figure out whether that was a bluff or if it's actually real. But right now, Germany has taken steps to stop certifying it. So commodities are a little bit all over the place. And then again, depending on what the sanctions look like, Iran is sitting there in the sideline saying, we have oil, and they got their own little song over there that they are chomping at the bit to start releasing their oil as sanctions potentially go against Russia and their export of oil. So yeah, a lot's going on today. Let's go right back in and let's bring it across to here, and let's talk about kind of what the news we saw this morning. So far, German business climate looked good this morning, right? Flash services and things like that, a little bit higher than expected. I think the market was a little bit over negative. Consumer confidence down a little bit, right? But not, it's down a little bit, but not quite as bad as what the actual forecast was. And that's great. Consumer confidence is what drives the market. Broadening inflation, we see that inflation is high, but people are still spending money out there. And again, some of this might be that prices are going to get more expensive, so let's do it now. Let's buy things that are extra. We do know, again, this time of year, there's always a little bit extra spending. So not necessarily surprised at the consumer confidence. We know the economy is softening a little bit, but it's kind of hard for confidence to be low when all the earnings have really been really good, right? I mean, they're saying, oh, our margins are down, but we're making tons of money. It's hard for the consumer to be like, oh, companies are doing okay. People are still spending. Okay, it's not, they don't understand the full implications of everything that's kind of going on right now. But, as far as an earnings front, the general public, everything doesn't look bad, right? It's not as bad. So later on today, as we know, it's not listed in here right now, but the president is speaking at 1 o'clock. Tonight, we have New Zealand expected to raise their interest rates yet again up to 1%. Now, that's pretty important. Coming from 0.75, again, we can't trade New Zealand on Nadex currently, but why it's important is this is the 3rd consecutive raise in a row. They've been on a kind of a slow and steady path, but, and I say but, with coming up to 1%, I've mentioned it a few times in the past that we have this carry trade coming back online, and the farther they go, like the higher the rates go, the better and the more beneficial the carry trade is. Well, the UK being up in that 0.5 to 0.75 range, It's getting good. It's just starting to get to the stage where it's getting past what someone could get in the bank. Now, technically with New Zealand now, if the New Zealand goes up to 1, technically now you're able to get a 1% by holding the New Zealand yen. So it's starting to, the carry trade is starting to come online. And we know that inflation globally still isn't great. So there's still, plenty of opportunity out there that, again, that's coming online that we haven't seen really for a while, really, at least since the beginning of the pandemic when everybody basically went to zero. But even more so now that there are actual legitimate full-size currencies out there, not just the little ones in small countries, liquid, whole nations that are now getting interest rate differentials that are starting to outperform what people can get into a bank. So again, great time to be in currencies and understanding it. Like I said, we can't really trade that one at Nadex, but again, this is starting to pave the pathway for other countries to do the same thing, particularly the pound and then also the dollar. The U.S. is they've talked about 5 raises, 6 raises, leading with 50, following 50, going to 100. There's a lot in there, so a lot of opportunity, right? Going into, and again, I'll just click more on this one. Going into Wednesday. Wednesday, again, I mentioned the pound 4:30 morning. We have the monetary policy report hearings. We get to hear kind of what the pound is looking like. Now, the UK has been very not, I want to say aggressive, but very forward with their kind of Ukrainian support. That's hurt them a little bit this morning, but you can see right now it kind of is leveled back out again in the 24 hours. Earlier today, the pound dollar and the euro pound were both really showing a lot of pound weakness. Now it's been kind of shrunk a lot, right? Kind of shrunk a lot. And again, if you're wondering, again, the UK is putting immediate sanctions. Mentioned that this is the first tranche of sanctions, meaning that there are more coming from the UK. But again, good for the UK to take a major role and a major stance in that one. I think that's great. We will hear more about additional raises for them because, again, inflation is something they want to curb. Thursday morning, and again, will a lot happen from now till then? Yeah, probably. Thursday morning, we have Bailey speaking. We have the U.S. preliminary GDP data, and again, it's expected to be up at 7%. Again, this is the recovery of basically things coming back online, right? A lot of people look at it as like, oh my God, we're doing great. We were, GDP was really pushed down from the whole pandemic. So we're just kind of coming back to where we were before. So yeah, it's a great number, but again, 7% higher than what it was before. Again, every reason in the world why interest rates should be raised. Unemployment claims. And then remember, because yesterday was a holiday, crude oil this week is on Thursday, not on Wednesday. Right. And then we have Messer speaking, and then we have, some pound news, and then Waller is speaking at 8 p.m. at night. It's a couple speeches. And then Friday, we have this core PCE. Once again, is it going higher? No, but is it increasing, I guess? Yes. It's still 0.5. It is still positive. It's not slowing down, meaning that it's costed even more. I mean, yeah, one of those things that the longer and longer and longer they go, the more expensive they get. We'll see what durable good orders look like. Again, they were kind of negative last time. We'll see if they remain positive. Yeah, yeah, so between preliminary GDP, core PCE price action, again, this is a lot of U.S.-based interest rate rising. Again, I think at this point it's 80% that it's going to be a 0.5. People today this morning, I remember, I didn't catch the name, so I was dropping my sons off. They're like, no, it's going to be a 0.25. Maybe they'll do a 0.5 later, but they don't want to, really hurt the economy. It's like the economy is so overheated at this point. I don't know. The reality is, if you do 0.25 and it doesn't slow it down, and you do 2 point, this person seemed to think that it was going to be like 5 or 6 raises of 0.25 in a row consecutively, and I feel like they're going to try to stem it, to slow it down. Like in that point, it's like, let's add a little bit. Nope, that's not good. This point, no, a little bit. Nope, no. This one, little bit. Like, will it take 3 rises or 4 rises? We could be in a next year and then have another entire year of inflation rising. Yeah, I don't know about that one, particularly with an election year coming up. So, or a midterm election year. So it's not looking good so far, but we got to watch those 2 big news events. It'll definitely be something that gold will be responding to. And remember, any type of comments about, with Ukraine, we're pulling back a little bit. They could be absolutely enormous opportunities to go long the indices. The reason why is because with the market kind of preparing, pricing in a 0.5 raise, if they show any type of dovish nature at all, which they seem to be doing a lot of, that, we're probably just going to do a 0.25 because we don't know what's going to happen with this World War III thing. Bam. Free money, new highs, right? could be a great opportunity. So keep an eye on the preliminary GDP. Either of those two falters, again, that's going to be people mentioning that, well, wait a second, maybe we want to slow down a little bit. Yeah. Yeah. Interesting stuff. And then obviously Monday, again, we won't meet again until next Tuesday. Monday, we also have the Swiss. Again, economic barometer there should be interesting. Again, and the Swiss is always interesting. And then obviously cash rate and rate statement. There's nothing in there right now, but is Australia going to start raising? And I think they're very, very close. The forecast is not up, but that could be another opportunity where even if they don't raise and they say they're going to raise next time, bam, it gets priced in. There could be a big, big mover for Australia late Monday night. So again, in the next 7 days, a lot of different trading opportunities, some big things out there, particularly for the United States. Core PCE is a very big one. Preliminary GDPs. We got a rate hike with New Zealand. But I think right now, again, a lot of this is going to be focused on the Ukraine and what's going to be happening. I mean, some of the big headlines we're seeing, again, Putin protecting the innocent, sending troops in. He signed treaties with separatists. And again, one of those things, like, you just signed treaties, you gave them credence, and you're also claiming more territory than the separatists own. These are all those kind of kind of not the headlines you want to see. One of the ones here, the Kremlin has said, hey, listen, we're there to save lives. We're hoping that we can still meet with Biden Putin talks, but we made the statement that if tanks cross, we're not meeting. So the question is, were we bluffing? Is he testing the bluff? What's happening with it? But it's funny. We're still open to diplomacy. It's like, well, yeah, but we just told you if you rolled across, we weren't doing it. And now you rolled across, claiming more territory. What's going to happen next? Again, he's going to push it literally to the brink, beyond what he's doing. So that's there. And the other hidden kind of news out there, and again, all evidence is that Putin has been on a full-scale invasion. Like I said, Boris is pretty in. They've done five banks, wealthy individuals, and they're also going to put some more in. They've already mentioned later today. And in the background, China still exists as a country too. One of the things that China's doing is, you guys remember all the drama like 2 months ago that China had, right? Right, with all their real estate companies borrowing, not being able to sell. China, when we're talking rising interest rates here, China cut mortgage rates in 87 out of their 143 cities, right? They've dropped it another 5 basis points on average, trying to boost sales and stimulate the residential property market, which is, blasted with a liquidity crunch and developers, falling to the floor. So interesting enough, there are other countries out there besides Russia and the Ukraine. So it's interesting that China is cutting rates, right, when everybody else is kind of doing the opposite, particularly in real estate. You're starting to hear the ads in the United States now about the rates may not be as low as they are, but it's not too late to refi right now, because everybody, the mortgage industry realizes the writing on the wall. But anyway, with that said, let's go dive into a chart. You can see right now, it looks like currencies in the last 24 hours are starting to stagnate again. -1, 4, 9, -1, 16, 20, 21. Dollar Swiss 51 is the only one that's really got any type of movement over an ATR in 24 hours. Yeah. A lot of this is I think once Biden speaks, I think you'll see some movement here. So let's go in. So let's start off with the VIX. Obviously, the VIX is high. Is it as high as it was early this morning? No, not quite as early, right? Not quite as high. Pulling back a little bit, but it's still higher than what it closed at on Friday. Again, we now have Russian tanks, armor inside of the Ukraine's borders, so that's naturally going to raise things a little bit more. The dollar not moving crazily from it at all. It's kind of chopping back and forth, kind of sideways. It's like, well, what are we going to do? What are we going to do? Everybody's waiting to see. So as far as the ES goes, this is where we're kind of looking right now. There's the overnight, right? The overnight high, kind of down to the low. I guess it was more yesterday morning, early to like late last night. You can see that this morning we really had a very difficult time with the 61.8. We kind of came up to it, we pushed down, we pushed in, we pushed back, we pushed up, came low for the open, right? We had that pullback for the open and then kind of burst through it. It didn't really clear the area. It kind of turned, and then right at that 10:30 time frame, this red candle is that 10:30 reversal. I think this was a smart play, was really to kind of see what the morning action was going to look like. A push up was kind of surprising. I was like, not exactly sure why we would go up with everything going on in the markets. But what happened was, all it was a signal to say, hey, listen, it's up for today. Let's create that Globex high trap, which would have been sitting right here, right? The second it burst through, which also happened to coincide with 10:30 in the morning, Again, I'll jump into a 15. You can see right there, here's your 10-15 spike. There's your 10-30 open, and boom, it did nothing but reverse back to the downside. So what it did in the black line is obviously the Globex high. So all it was really trapped saying, hey, listen, we don't care about that. We're going higher. You guys should all feel great. Everybody should buy. And immediately what they did is they turned in and kind of smashed it down. So right now you're seeing some slowing really from that 11 o'clock time frame on, starting to grind down a little bit. I would say there's a little bit of a zone right down here. And again, nice little pop at 4:45 in the morning. The problem is, as we're getting closer, we got about 40 minutes before Biden speaks. Got a question, is a 15-minute level going to hold something as monumental as what we're going to hear this afternoon? Okay. We've drawn a lot of lines in the sand. We've made a lot of comments for things. Unfortunately, with what's unfolded, it's kind of like a who blinks first type scenario. Not that war is bad for the overall economy typically, but again, it's not necessarily what people want to hear. Everybody has their own opinions on it. So one of those things, had Biden not been speaking about something like World War II, I'd say this is probably a nice little kind of opportunity for this afternoon. As price comes down at lunchtime, people are gone, people come back and they're like, oh yeah, I got to sell all my shorts for the morning. I got to sell them, right? Gives the opportunity for us to go long again. Right now, we're kind of consolidated and there's a decent level up top up here. Right there. And again, we've had a little bit of testing and a punch through, and vice versa. On the bottom side, we also have a level down here, right? So we could easily draw and say, hey, listen, this is a decent top and bottom. And I would say on any other given day, I would say, yep, probably. Yep, those are good opportunities. The problem is, again, are we going to mobilize troops? Are we going to sanction them? Are we going to ban? What are we actually going to do? Setting up a trade like this is not necessarily the ideal situation. Now, if we're able to not break either of those two with what Biden is saying, they could be both great trading opportunities for both overnight trades as well as tomorrow morning, right? If we're going to kind of float in the middle. And again, we're kind of hovering between the 68 and 50. So I think it's decent opportunity. If you guys wanted to kind of, set alerts on this one, I would say that both of them are probably decent alerts. I kind of they're really both tested. This was actually a tested level. From here, you can see we kind of touch a little bit. So I would say that either of them is probably, decent. You could set a red alert up top, and that's sitting at approximately right where are we at here? 43.83, and vice versa. On the downside, we could also set an alert, and that would be at 42.60. Right, 42.59.25 could also be an area down there below. And I think either of these are great levels. I like the formation of them. The big question is something the president's going to say, is it going to blow through either of these two levels? That's the one question that I don't have, because geopolitical events are one of those things that there's really just no way to prepare for. It's better for it to get in. But if we do spike down to those levels, I think they could be nice reversal levels. He could just say nothing and say, yep, I'm going to meet this week, and we'll see how it goes. It is what it is. Take it. Again, set those alerts as you want. There's top and bottom. NQ is kind of similar. NQ did come all the way back up again. Now, NQ, we had a couple different draws. We talked about kind of the kind of high from what, the 16th all the way down, kind of this steady push to the downside. We knew that we had the 50% sitting right at the level. We drew it earlier. It's sitting right there at 14,414. We got super, super close. You can see that we literally came up at 10 o'clock. The 10:30 was where the reversal kicked in. Again, the standard time. It actually hit this little level right here. And again, this is one of those like, oh, it was touched. It came down. It came up. You're like, oh, just go a little bit farther. And we missed it by just a little bit. So unfortunately, this is one of those ones that all the algorithms out there knew that the 50% retracement was right there. They knew that this was a very, very easy draw. And what they wanted to do is they knew that a lot of people were going to have orders up there and they wanted to get in first. It got front run. It happens in trading, and you can see how much of a run from the original zone that we had set up from earlier. Had you traded this one, we're now at a 1 to 5. Your 1 to 3 is sitting right there. So again, almost immediately went to full profit target. Unfortunately, this one, the train left the station without us. It got front run. It happens. There's not much else we can do. Now, with that said, we'll remove this just to clear it up a little bit. We'll remove this level. Again, this small zone here got chopped through pretty quickly. Now let's reverse it in the other direction and say, okay, well, what about from that low to high? And that's where we're sitting at right now. We came down and we started to bounce off of it for a 50. So question is, do we go long from here? It's in an interesting spot. The reason why I say it's at an interesting spot now is because we know really what's coming. right? We know right now we're at a 50 percentile. We know we got nothing else sitting there right now, right? Really, the only true level that we have is we have some basing occurring down here. We got some testing going on right around the 78.6. That's the only time I have a test, right? That price is sitting down here at 13,327. Right now, there's nothing. Technically speaking, looking at this price action wise, there is no buyers in here that is going to save this until we get down to the 13,723. Now, you may say, well, wait a second, it did, buyer stepped in. Yeah, most likely because it's an easy fib draw from the overnight. So that a lot of the algorithms will step in and take that fib, for a long trade. Question is, though, at this point, we knew that we needed to take a reversal off top. We knew that this is kind of a profit target area. Is this going to hold? Reality is, it's kind of risky, right? If you were risk averse, today's not the day to trade. 26 minutes or 36 minutes or whatever it is before the president is about to speak about World War III. So use your best judgment on it. For me, I'm not really willing to get into much. And again, if I'm removing all the news from the situation, I think 13,723 is really the area that I would be looking for. Some buys coming in just because the power at 5 o'clock that kind of rocketed this one. Unfortunately, I missed the top. But I think, for me, I'm going to wait till we get back down to the bottom. And even at that point, I may look for some type of a confirmation entry. I'm just concerned that Biden's going to say something to kind of shoot this down. And in reality, guys, this is a 15-minute level, right? Is a 15-minute level going to give us the appropriate buyers and sellers for something that is, with the scenario we have with kind of World War III, right? Yeah, little hard there. YM. So you can see that YM, we did have a level. We mentioned this one earlier today, drawing from top to bottom. We said the 50 had a little bit of a level. It was okay, but it kind of pushed a little bit higher. So we knew that this was really the third attempt in. We had 1, 2, and 3. We did have an untested level right above that. And you can see right around 7:30 this morning, we hit it and started to push back down. We had the initial rally up, but we didn't get a second entry, and then it also continued to collapse. Now, YM, again, if we weren't speaking about World War III, I would say that, listen, there's a nice little, that 430 punch. It is right at the 23 from the kind of the bigger top to bottom pullback. If we take this off, though, and again, remove that line, because some people will be looking at and go from low to high, you can see that it's also right around the 61.8. So we're in the right range, and you can see we already hit that level once. This was the opening trade of the day, right? Let me delete this real quick just so you guys can see it. Well, actually, I'll go to here. So we knew we had a 61.8. We knew we had an area of basing. And again, that's what that yellow area is. This was an opening position today, right here. And your 1 to 3 is right there. So you can see that was basically almost an immediate 9:30 hit, and you were out. This one had a full rise up to about 1 to 5. So, but there was your opening trade from the low to the morning high, right? Actually, it's right, right. Yeah, right there, right there, low to high. You guys can see where it comes through right there. So that was the opening trade. It's already out. And again, any longs, this is why having a profit target is important, because you can see from where it opened, we're actually lower than that area right now. So not necessarily interested in taking it again for a long. All this basing right above here between that 10:45 to 12 o'clock time frame, it kind of takes a lot of it out for me. Like, I'm not really necessarily interested in going long again. Why? Because it's formed a base right there. We know that there's sellers up here holding this one back. Downside, you could also say at the same time, we have a level sitting right there. We already have some thoughts. We know that it's an area in the past. It's been touched twice already, so it is a third touch of the level. Could be a potential rollover for later on, but it's really going to depend on what Biden has to say later about the situation that's going on. I would say probably not great, but we'll see. Russell, similar scenario. This one came all the way back up top, touched the same area. We'll do the same type of draw, right? Fib up, you can see that there is an area kind of sitting where we're at right now, right past where the 50% is. I think Russell is kind of earlier today. It was the strongest. It was the only one that was green out of all the indices when we were meeting for our morning show. Right now, it's kind of in the pack. ES is more or less similar. I think Russell today is probably a little bit more risky than the other ones. Any comments made about raising interest rates or things like that, obviously, are going to affect the Russell the most. Talking about bank sanctions also hurts Russell the most. I don't know. For me, I like one of the ones that is a little bit more liquid, a little bit more volume than them. So I think ES, NQ, and YM are a little bit better today. Could you trade NQ or Russell? Yeah, you could. The small caps, but I think small caps are going to be a little bit more at risk for anything that is mentioned today. So just be cautious with it. I think tomorrow, again, kind of the same levels we had up top. A little bit of basing and a test right here. If we are able to rally back up the 2021, I think that's decent. Bottom side, again, there are levels here. It's been tested twice. Am I looking for an immediate long? No, I'd probably look for more of a confirmation off of it. But both other times that price has touched it, we've taken bounces out of it. So not necessarily the most, not the worst area on the chart at 1964. All right. So let's dive into currencies next. And currencies are all kind of pulling back again. Last week we talked about this channel. We finally broke through with a little bit of dollar play late on the 19th, and it immediately pushed out and then kind of pulled right back into that kind of sideways channel. So I would say the overall kind of longer term trend we had for the week, we are officially out. And again, we knew we were going to have problems once we came all the way up top. So let's remove this. We're kind of sitting in that top level now. Let's bring this down to a 15, so a 30 minute. So you can see right now, drawing tops and bottoms, the 71.51 is still a decent level. The 72.37 was still a level that we were looking for. I think tonight is probably a decent time to look at this. And the reason why is New Zealand is raising. A lot of the economic policies that New Zealand puts in is also similar to what's going to happen in the Aussie. Not that the Aussie is raising right now like the New Zealand's expected to, but we do know that in the upcoming days that they are having some meeting notes. We do know that they have a rate decision next week. Question is, can we get some preparation in this? And with the dollar, right? Any comments about the dollar should kind of, stack some massive strength into the dollar. That should also lead us in somewhat of a short. So right now, again, the last time we were up in this area, it did have a very, very strong push away. We are poised more on the top. I would say right now, looking at this one on a more of a fundamental basis, I would say that this one is probably more looking to push back down again. Of the kind of two Aussie trades, kind of like this one, although I wish it was just a little bit higher up. I wish that we hadn't kept getting front run from this level. I like this level. I don't like how it keeps basing and kind of consolidating itself, but I do think we are set up for a short this week. I think the GDP and the core PCE data, if we have not broken through, I think both could be nice little triggers on this one that take short. So again, euro dollar is a great pair to trade, but I do think that the Aussie dollar this week will be pretty decent for both GDP and the PCE. Just because, again, the association with rising interest rates and things like that. Again, the Aussie has the kind of the proxy through gold. So Aussie yen, also to level. Again, we've hit once, but we haven't hit it a second time. The 83.22 kind of set the same way. Also, this one, I also kind of like this one for a short. Do we use this level? Sure. I think this one has two decent levels up top. We have an alert all the way up top at 83.85 or 83.86 right there. I like that one. This one, it has been pushed, but again, it hasn't been able to get back to that level, and it's running into some sellers right ahead of time on there. So again, it looks very, very similar to the Aussie dollar. Aussie yen, the yen, whenever there tends to be bad news or rising interest rates, the yen tends to be getting some strength. So look for the yen to kind of be, same idea. I'd like to get short, but I don't have, it's in such close proximity right now. I'd like it to run back. And actually, let me see. One could be close. Yeah, it's a 61.8 down here. I was trying to see if this level right here, I like the formation right here. I like this formation. A one candle bottom with a nice pop out of it with ascending wicks like that. Ascending wicks by meaning that there's one here and then it goes higher, then it goes higher. Tends to be a nice telltale sign that there are some buyers sitting there. So that could be, let's see, what do we got here? Wages. Machinery is not going to make any difference. Yeah, so later on the week, news-wise, this could be a possible setup as well. Let me see, how much does it have to move? 43, so we're about a day away. If you guys know how to set alerts, probably a decent level to set an alert off of. If we are pushed down here for one of the U.S. alerts or the U.S. news releases, that could actually be a decent little play too, right at the 82.54 level. So, not bad. Euro pound. So you can see that the euro pound had a big push up and a big push back down again. This was kind of one of those parabolic moves where suddenly at 5 o'clock this morning it took off. And really, from the European session open today, I mean, here is the 2:30 candle when all the sanctions and everything were going to be released. It was initially taken as very, 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 very weak for the UK. And now the UK strength is all kind of pouring back in. And it's really pulled back to a level where we do have buyers. And this has been, this has been a level, right? This is a level that we knew, again, basing, kind of went through. We were looking for a Harry Potter trade, kind of got stopped out, kind of went back in, hit, went all the way down to the profit target again, gave us the entry on this side, not necessarily there. It gave us the entry over here, right? And didn't quite make it. Let's see, how far did it get down there? We got pretty close, right? And now we're back in the same level again, in a level of basing. So for me, I think I'm waiting to this 83 mark. I think 83 makes the most sense for this one to be able to get long. Obviously, this is a strange one. You know, the UK is showing weakness, but then obviously if there's war, the euro is also going to do weakness. We haven't heard all of these sanctions yet. Excuse me, from the European region, but we will hear some more. So right now, I would say that really there's no differentiation right now between the euro or the pound. Remember, for U.S. releases, you typically want to play one of these two against the dollar. Right now, it's indifferent. You know, all the push up has really been kind of rallied back, and it's an area that we know is very popular. So, trying to think. Let's see. Let's run top to bottom real quick and see. Yeah, you can see we're sitting at 61. The 50. You see how the 50 had it didn't do anything. So yeah, we're in full consolidation mode. Final numbers. That could be one in there. Let's run 71. Yeah, not concerned about that either. Actually, that gives us a little hidden zone too. Let's take. I'm gonna put a top on this one. Well, actually, we're gonna put it there. 1, 2. Yeah, we're gonna put one in there. I'm gonna put a price tag on that one. We're looking for 83.82 up top. We are gonna set an alert for that one. Okay. Add. Sure, that looks good. Turn that red. All right, so I like the level. It's kind of like a little level of basing here, but we do have one touch here as a confirmation, then a second touch too, and that kind of led us down to the bottom. So I'm kind of looking for that another one. As far as buying goes, I'll remove this now and we'll remove some of these off. There is a level of basing here, but I really don't. You know, it took off at 3 o'clock. That was news based. I don't really necessarily think that that's a great area for us to go long again. I do think it is a profit. So if you're looking for a profit target to the downside, I would say 83.15 is probably a decent area to grab some profit if you are short this position. But right now, I wouldn't really do a whole lot else with it. Like I said, this is kind of what we're dealing with buyers wise. Nice strong push, but not necessarily the best level to take something off of. So we really kind of need a new bottom to form before we're willing to go long again. Now, euro yen. Here you can see again, this is that old area that, again, we weren't using this for anything really. Again, push at the end, push at the end, push at the end, push at the end, based here, touched it again, used it here in a Harry Potter trade, kind of went through it, rode the top, came back and rode the bottom. So it's definitely an area where we've seen some pushing. This 130 from last week, we did have a nice rally out of that one. It is over now. And then we pushed all the way, we pushed all the way back down again. Delete, yes, there we go. All right. And then again, our profit target of 129 was hit. We talked about an area of basing, and that's kind of what we went off of. I think right now, drawing kind of from this top to bottom area, you can see that the 50, it put up some resistance, and really the zone was sitting right here a little bit above, and that's what we ran into. Right now, if we took this and reversed this to the downside, let's see where a potential area is, because there's probably something sitting right there. Yeah, see how the 50 is right there? I'd say that at least in the euro, and it's funny, it actually blocks off the 50 and the 61.8. You see that? It blocks it in. Probably a decent level. Problem with this one is the European market is now closed. This is purely a yen play. Biden is speaking in about 20 minutes. I don't know that we can, let's see. It's about 17 pips. The 30-minute ATR is 19. So in the next 30 minutes, we could get to that level. Could that provide some European strength? Yeah, it could. But again, is a 30-minute level 50% retracement going to hold something like, a Biden speech in World War III? Maybe, maybe not. Maybe not. But I think it's a decent level. Again, if there wasn't a speech about World War III, then I'd be like, yeah, there's a decent level. I'm just very, very cautious and kind of risk averse when it comes to something as major as, right, the entire world is, going against one country and one country is invading other countries. Kind of a weird kind of setup on that one. So, but 130.06 is a decent level, right? It's a decent level. Euro dollar. So euro dollar came down. We had this level marked off from last week. We gave you guys a top and bottom of 114.05 and 112.92. As you can see, came down, touched it, and then again, here's the whoops. There is the European Open right there. There's the 3 o'clock candle, this big green push, and all this did was provide European strength. Now, a lot of people, I actually got one of my students messaged me earlier and says, why are we seeing European strength if they're getting invaded? I think a lot of it had to do with the solidarity, that basically everybody's like, no, we're here to support you. We're here. The UK was in. It provided some strength. Again, basically unilateral kind of sanctions issued from the EU. That tends to be a positive thing when they're all, because again, they don't always agree on stuff. In most cases, they don't. This is one of those things they all agreed upon, which is actually kind of a really good thing for the EU because that's one of the EU's biggest problems. Right now, again, had you were long, you guys are obviously way out of this trade already. The 1-3 is definitely been hit. If you're taking really from this morning up, you can see that again, the 50 was kind of the problem, but it's not really rallying much past that, and the market is now closed. And again, strong US is lining up. I think we'd probably come back down again. So, as far as, if using like a 50% as your target for the short, I think is probably okay. But right now, would I be looking to go long this one? Not really. I'd probably wait to 129.43 or 42 again. Or I'm sorry, 112.93. I think it's a decent level. Had a nice little touch here. If you wanted to refine this a little bit, you could say, hey, listen, there was your basing. I'm gonna use that level right there, right? Or maybe even shrink it down just a little bit more to the green candle. I think that's a better opportunity. If you're going to take this long, you could say, hey, listen, go right here. And it'd be long right there. But again, for me, it's one of those things. One of my personal trading rules is, when there's something geopolitical going on, I tend to kind of pull back and only take really, really larger time frame zones. This is one of those ones. If we weren't talking about World War III again, I think decent level. I like it. It was tested, and really brings us back down to the European session open today. So pretty good. Pound yen. Pound yen looks almost exactly the same. Our target level, we ended up hitting our target level a bunch. Look, we dinged it, based in it, and then kind of used it as a down run. So we can remove it now. Again, it was a target for us. We were looking for entries down here at 155.36. It kind of turned early, and then again took off here. I think let's remove some of these now. I'll just take them off. I don't need that. Pull some of these off and get some newer levels. You can see where this one turned. I don't really. It's not my favorite of areas. Let's see. All right, so this is a little different. So we do have a little bit of a basing right there. It is hiding right between the 50 and the 26. It has about 20 pips to go. This one has a 30-minute ATR of 19.4 pips, so it absolutely can come down there in the next 30 minutes. Now, this will be this one is an interesting scenario too because it's the pound yen. So the yen is really what's in play right now. The UK market is closed. I like the level. My concern is the yen exposure in this one. I do think that will come down. I'd like to see a confirmation bounce off of this one. If you guys don't know what confirmation bounces are, I want it to come into the area and pull away, and then I want it to pull back again and not be able to go lower. And when it kind of stabilizes itself and goes up, I'd be looking for a bounce. So I'd be looking for a confirmation entry only in this one, not just a simple touch. This would not be a set and forget type trade. But now we're seeing kind of a reversal a little bit, and it is the yen. I'm just afraid that the yen is going to get a little bit funky when Biden starts speaking. But if it doesn't, I kind of like that scenario with a confirmation bounce. Okay, pound dollar. So mentioned this before. All right, so here's kind of that level. Again, this one made it to almost, it's like 2.5 to 1, and then again, use that level, short. Right now, again, these are things from last week, right? This is a parabolic move from 10 o'clock forward, right? Here is a parabolic move forward, okay? Right now, being in a level of basing, I would be looking for more of a retrace to the downside. Now, you could have used this old level. You could say, hey, listen, I like this level right here. I am looking for this one to come back down, and I do think it makes a decent amount of sense on this one. We do know that the target down south is 35.25, right? We didn't quite get there earlier today, but again, from 9:30 U.S. Open, nothing but dollar weakness. I think dollar strength is about to come in. So again, I like the short if you want this level. Again, this is one of those ones that if you guys are understanding how to play, some Nadex contracts, your 1 to 3 is well, here's where, it's well within the range of where the profit target should be. There's technically where your buyers are going to step in. So I'm kind of looking for a short in this one. And again, that's getting short right around this level. And this is one of those ones that if you're, we're kind of right there right now. Biden speaks in 15 minutes. I don't have the Nadex platform up right now, but if you guys are looking for a position, there may be a 2-hour binary kind of stepping in right when Biden starts to talk. That may actually be pretty decent, depending on how much spread is in there. Could there be a catalyst for movement? Sure, absolutely, sure. Now the question is how expensive it's going to be. It's a little bit too early to see the spread and the amount of premium coming in. But we are at a parabolic retracement up. It is, we are looking for kind of a short position. So look for that one to roll right back down to the kind of profit target of what, 135.40-ish level. Dollar CAD. So dollar CAD. We talked about this one being 127.72. It got close and then kind of pushed back, and now it ran into buyers. Dollar CAD for me, I basically just have shorts in there. Oil is not having necessarily the best day. It's down $1.37. It's down 1.46%. It's still at $93, and depending on, I do think there's going to be exposure with oil. And let me explain what I mean by exposure. We're going to cover oil last today. One of the things that's making Russia, again, at $90, Russia's making like $200 million every single day, right? Based off the price of oil, right? Off how many, gallons of oil they produce every day. If we put sanctions and we try to go after their energy, remember, Russia's main income is the exportation of oil, or not oil, but like energies in general. If we start to put any type of sanctions against that, that means that there will be lower energy supply out there. With the lower supply, I do feel that oil is potentially on the cusp of another burst higher. Again, bringing Iran online definitely helps keep the oil prices down because that would be supply coming online. But if you really want to stick it to, Russia, putting sanctions on the amount of oil that they can export, right? That would actually put a big crimp in. Now, saying that, hey, listen, oil, we're not going to take Russian oil, but we will take Iranian oil. That'll kind of level it out. But again, I think there's we're not fully in agreement with Iran yet, but we do know what's going on here. So I do think if they do that, the CAD is going to get some strength. I am a big believer in dollar strength right now, but I do think with where oil is right now, if we do any type of sanctions that affects energy, I think oil prices spike. That will give the CAD a decent bit of strength. And again, that's obviously short opportunity for us to go lower, right? And again, that's CAD strength coming in, right? Dollar Swiss is rallying up again. It is pulling back. It is kind of coming into a level. And again, if you want to run some fibs on this one, you can bring it up and say, well, look at that, the 50. Yeah, it's the 50, but here's the actual level right here. Whoops, rectangle. Here's the 50 level right here, and it was touched, it touched, it touched. It came back up, and you can see that the 50 didn't slow it down. The area where sellers have come in the past is really what slowed it down. It was a decent trade. It's not, it's not completed yet, but it's a little bit too late if you guys are not already in. 1 to 3 is sitting right there, which is a fine target. It's pretty close. It's basing right now, and again, it's waiting for Biden to speak. Remember, the Swiss is neutral and everything, no matter what they do. So it's kind of one of those things that you tend to get a lot of strength out of it. But it's up. It's up the most. Not the most. It's up the second most at 0.54% right now. The only thing that's up more right now is the Aussie yen. So we're seeing it, but I think this one comes down to test, maybe before Biden speaks, or he's going to be the whipsaw factor. Now, dollar yen. So I do like dollar yen. I actually like the level up here, the 115.34, sitting at the 60.18% target. It is tested and it did have a nice push away. The 50 is a little bit more muddled. There's a couple sellers up in here, and they pushed up and pushed up and pushed up, and really until we got down here, we didn't know they were there. But they were there in the past, just not in like a really clean manner. You could say that, hey, listen, right there is where right there's the zone, Brian. And there, look, it's tested. You're right, it is tested. It did not get stopped out. It was technically a valid trade. This is a hard one because that's two Rams, right? Are we going to see dollar strength come in? Probably. Are we going to see yen strength in? Probably also. So I think both of them are there. I think dollar yen is a very interesting pair to play right now. I do have like clean shorts up top at 115.87 and 114.15 down below. The bottom of this is okay. I do I did look at this and say, wait a second, it is a one candle base. It did kind of explode out. It does have the ascending wicks. It was kind of tested here, right? It dropped on the top of it. So it is a level that I think we could potentially use. It is about, what are we talking about? 35 pips away. So it is a decent portion away. I'm kind of looking at this because if you see all this news, we have all the news here, all the news here, all the news here, all the news over here, all the news over here. There's a lot of news stacked up, and we do have, cold pork bellies is not going to really affect this one, unfortunately. But I do think a lot of the news sitting right over in here, I think this could be a decent place for us to go long from any of these, right? We'll see what happens after Biden speaks, but if Biden speaks and it doesn't completely blow through this one, I think there could be a decent long target, especially for news over here at 114.60 for tomorrow morning. So kind of keep that on your radar, all right? Like I said, I want to see what he says first because I do think both the dollar and the yen is going to get some strength out of this. Question is how much and how much whipsaw are we going to have in the dollar yen? So let's go across. I'm going to go to natural gas first. I want to do oil last today because I think that's the one that we're really going to put the most effort on. So we still have a Harry Potter set up down here for natural gas. It's been down here 3 times. We're just waiting for it to come through at this point. Again, I think it's important to note that we did have a gap area. Again, whenever we have gaps, it kind of reestablishes an area of buyers. Right now, going from that gap, right, if we run fibs off of it, right, if we run fibs from here to here, you can see that the 50 really didn't provide much. It kind of sliced through even the 61.8 and then started the whipsaw back and forth. The level of sanctions we put on Russia, and again, at this point, they cross the border. If we don't put sanctions, I'm not exactly sure what we're doing. I think that this one also stands to kind of jump. Okay, and the reason why is this. Russia supplies a lot of natural gas to Europe. If the European Union, if the United States says we will support our allies, we're going to figure out how to start shipping natural gas. Anything that they say about natural gas, this stands to jump. Okay. I don't think there's any scenario right now. I mean, unless, I really don't know. Remember, the pipeline's off, limiting natural gas. If they do any sanctions with gas, again, limits natural gas. I think natural gas is poised to go higher. Is it an ideal spot? Not really. It's not in the best. I don't like the candle formation here, but I do think, again, for natural gas players out there, it's already up 3% today. Obviously it could go higher in the overnight. It ran right into a level that we had mentioned before, the 482. I think we get any type of movement higher. We start breaking through these highs. I think we come right back up and touch this 482. I think that's a big one. Question is, can we start to form a base and punch higher? Would I be surprised tomorrow if we were looking at 5? No. I think it absolutely can go that far. All right. So be cautious, depending on what Biden says. Could be a great long opportunity. All right. And again, those Nadex folks out there, maybe start looking at, is there any cheap premium ones out there for natural gas? I think natural gas has the ability to pop. Now, gold is flat. Gold is stuck. We had this little kind of basing channel. We're still in the same area. Nothing has really changed in gold. We're still kind of floating in that same group. Delete a couple of these just to clean it up a little bit. Keep that. We don't really need these two. These were kind of basing. Right now, you can see there's a little bit of a top put in. Gold has been somewhat insulated right now, but I think this level up top, you can see we're kind of bouncing off of it. Gold isn't really sure. I mean, again, gold is going to be mostly linked right now to interest rate rises, not necessarily what's going on in the Ukraine. Could we see a spike in it? Sure, we absolutely could. It is a huge event that, again, we don't see too often. But I would say right now, gold is really not the best place to be in. If anything, you should be looking for gold shorting opportunities. I think both the ADP number as well as I'm sorry, not the ADP number. Well, the employment data matters. Yeah. The GDP number as well as the PCE data this week. I kind of want to get short gold on both of them. I think both of them are, again, if they come in big, that's more reason to raise. That means, again, crushing inflation down. But again, PCE is Friday. It's Tuesday. See where we're at. But I like gold short on PCE data. Silver, kind of spiking back and forth, but I wouldn't say it's really left. I mean, it was higher, it's lower, it's higher again. I think it'll come lower again. I think 24 is a big thing right now for, it's a big level. We do have a level a little bit higher. Silver should follow whatever gold's path is. It's up a little bit right now, but again, it still has the ability to kind of pull back. I think 24 is going to be the kind of the base level for a while for silver. And again, PCE, and GDP later this week. I'm kind of looking to see if we're in levels, and then again going short from either of those two with rising interest rates. And last but not least, let's cover oil. So yeah, so oil has been up and down. So in the overnight, again, I drew fibs kind of to where its high was, and you can see that it came down. It sliced right through the 50 like nobody's business. Kind of came down, and actually this should be, whoops, not that one. This one should actually be sitting there, right? You can see it kind of pushed all the way down to the 61.8 at that level before turning. And again, this turn was at 10:30 in the morning. Again, the common reversal time frame. Right now, let's see where more sellers will step in. You can see that the 50 is a little bit higher before they step into this one. I'm not really concerned about that one either way. I would say, I mean, right now, I think it's a decent level down below, right? Decent basing, and that was kind of an old level we were pretty close to. I think right now, 89.47 is a decent bottom for this week. There's been a couple areas of testing in here also. I would say up top, we already know that 94.84. You can see it touched here, and then again, we touched in the overnight at 4 o'clock in the morning. I would say right now, upward side target, I would say that that's probably where we're looking. The next push, the next true push, again, there's that $95 mark, kind of right here. I mean, 95 is right past this. Kind of wouldn't be surprised to kind of hit that today. Again, it depends on what type of sanctions. If they mention sanctioning, I don't think they'll mention Ukraine and Iran all in the same breath. I think if they put sanctions where they start halting, I think oil has the ability to pop at least $1, $2 today. If we jump to 95 at 130 today, would I be surprised? No, I actually wouldn't. Would I take it long right now? Probably not. It's a little bit risky, and it's not really at a zone right now. But I would say right now, top and bottom, you got to be looking at $95 and $89.47. I know it's a $5 range, but that's the type of volatility that we have right now. Yeah, I think. Ooh. Remember, oil is a day later this week too. I was gonna say if oil was tomorrow, I'd be looking for the API report. Yeah, I'm trying to see. Let me drop this to 15. What I'm looking at is there is an area there. I was looking at this little area right here, right? Yeah, it's a 61. I was looking at that area. I was like, yeah, there's a little base in there. There's a little pullback. A little, I like that little confirmation there. Could that be in? Ooh. Biden's going to start talking in 3 minutes. Question is if we can hold that level or not. Would I be interested in getting short oil before a mention of what the sanctions are going to look like? I don't think it's a very smart idea. If he mentions nothing about sanctions, including oil, that could actually send this tumbling to the downside because I'm assuming that that's what most people are going to be looking at or calling for. I think after, if there is a big spike, I think, again, the 95 level is a target to the top side. I think 89.50 is an area where we're looking to go long, really kind of more for oil news later in the week, the inventory report. But kind of watch the level that's down here, right? There's a basing level right here. We've hit it. We've gotten close to it. So, yeah, I think I just think the probability of him putting energy sanctions on is extremely high. And if he does do that, that is going to move oil around. And this is only a 30-minute level. It's already gotten a bit of a pullback today. It is a decent, it is a 61.8 level in there, so I would say look for the spike, but just be extremely cautious. I think oil is absolutely going to be under the radar. But if we do see a big spike, particularly up, okay, if we see a large spike up, definitely look for a potential reversal because I expect if they say we're going to put sanctions on Russia, we're not going to take Russian oil or whatever it is, look for them to bring Iran on board. So we'll get a pop with limited supply and then a drop with the addition of Iranian oil is kind of what I'm looking for. But again, is this the level that's going to hold in that news? No. It'll probably be 95, 96. It may actually be a little bit higher than that because we've touched it. It may actually be sitting more kind of up in this range, the 85, 70-ish range. Okay. All right. So a lot in there. Love to say that, this was the ideal opportunity for me to give you guys levels for the week, but minutes before the president is going to speak about sanctions on one country, sending tanks into another country, just be cautious with your positions out there. Remember, with Nadex, the cost to enter the position is the most you can lose. So having some type of vehicle like Nadex and options in general with a limited, a predefined risk going into the trade is very, very beneficial. Be very, very cautious if you're out there trying to trade futures in this, because there could be major gaps, and yeah, you can get something like a margin call, which you can't get at Nadex. So with that said, mark your calendars off next week. Next week will be Tuesday, March 1st. And maybe we'll have some news for you. I think the crypto deal, the crypto.com deal, will probably get kind of finished up in March. I think that's what the original projection was. And if it is, we'll have some cool new things to talk about. With that said, I'm out of here. If you have any questions about anything I said today, go ahead and shoot me a message at support@keeptradingsimple.com. And if you guys are catching us in the morning shows, 8:45 to 9 a.m. on Nadex YouTube page, just go to YouTube, search Nadex, click the follow, and then the bell icon for notifications. We go live every morning trying to find what's hot. With that said, turn the news on, look for your headlines, look for these charts to spike, and I'll see you guys tomorrow. Good trading.